Hi everyone, have you ever found yourself wondering if the property investment hustle is truly worth it? Today, we're not just dipping our toes in, we're diving deep into the nuances, exploring both the highs and lows of property investing. Buckle up because this isn't your average ride. It's a roller coaster of insights you won't want to miss. Section 1, is property investment worth it? As you scroll through the vast expanse of YouTube, you're bombarded with videos promising the keys to financial success, from property and stocks to currencies, cryptos, and the intriguing world of dropshipping. It's undeniably motivating to witness these success stories, showcasing individuals living the life you aspire to lead. However, there's a catch. What you see on these videos is often a highlight reel, a distilled version of triumphs. Today, we're breaking the mold. We're not here just to spotlight the positives. We're delving into the potential pitfalls, because when you're questioning the worth of property investment, you deserve more than a one-dimensional answer. Success can be life-changing, but so can failure. Let's explore both. Section 2 are 3 key questions for property investors. Let's dive into these 3 crucial questions every potential property investor should be asking themselves. Number 1, what are repossession rates? While it might seem a tad negative to kick things off with this question, it's imperative to open our eyes to the risks. Here's a revelation. Around 20% of properties in the UK are dedicated to buy-to-let investments. Now, consider this. Of the 6,702 repossessions in Q3 of 2023, a staggering 91% were buy-to-let properties. Pause for a moment and let that sink in. Even though only 20% of properties in the UK fall under the buy-to-let category, they make up the majority of repossessions. If that doesn't give you pause for thought, then consider this. A consistent trend since 2010 shows that landlord repossessions have remained notably high compared to the dropping rates of repossessions for private individuals over the same period. It's not about alarming statistics, but understanding that individuals are statistically 20 to 30 times more likely to stumble in buy-to-let investments compared to owning their own homes. Owning a home doesn't magically grant you the expertise needed to succeed in buy-to-let investing. That's where many find themselves caught off guard. The second thing you have to ask yourself is number 2, why has property investing got harder? If the repossessions graph has planted seeds of doubt about the worth of property investment, worry not, that wasn't the aim. The landscape of property investment has not perished, it's evolved through time and without a doubt become more challenging. To navigate this tougher market successfully, it's crucial to understand why it's gotten tougher. Consider this scenario. Property investment, much like any seemingly get-rich-quick endeavor, experiences phases of exuberance. Let's draw a parallel to cryptocurrency investing, an extreme accelerated case study. Initially, it was a whirlwind of skyrocketing prices, everyone rushing to the market, and an air that suggested crypto could only ascend in value. Early adopters naturally reaped enormous profits. But since then, crypto prices have undergone the roller coaster ride of crashing, stabilizing, and achieving a more balanced state. They are now closely monitored by governments to ensure they're not as erratic. Now, understand that crypto and property are distinct investment, but the parallel here is crucial. The moment a market perceives something as a sure thing, inevitability unfolds. People rush to it. We've witnessed this phenomenon in property investment over the decades. As more individuals join the fray, the market becomes more competitive, diminishing the ease of achieving remarkable returns. And inevitably, as things teeter towards chaos, regulations step in. You might be pondering, what has changed between generations? Well, several factors contribute. Number 1, the era of 0% deposit mortgages for buy-to-lets is a bygone, demanding more substantial upfront deposits. 2, an additional 3% stamp duty on investment properties amplifies upfront upfront costs. 3, changes in landlord taxation through Section 24 have left many landlords with higher tax burdens. These interventions from the government aim to cool the property investment market, curbing excessive liquidity. We've all witnessed firsthand the consequences of the opposite approach when stamp duty was reduced and interest rates dropped. The entire market overheated, resulting in a dramatic surge in property prices. So how do we make a success out of property? Well, that, my friends, is the third and final question you should ask yourselves. Section 3, strategies for success in property investing. All these shifts in the market signal the end of an era where you could buy anything and watch its value skyrocket. If you're seeking a swift path to prosperity, 2 essential strategies can transform property investment into a thriving business. Better yet, combining both can set you on a path to unparalleled success. Strategy 1, adding value to the property. Adding value isn't just a suggestion. It's the essence of a successful property investment. Consider it a business. Here's a step-by-step breakdown. Step 1, identify a raw property, something you can add value to through renovation or conversion. Step 2, invest strategically to enhance the property, ensuring its final value surpasses your initial investment. Step 3, reap the rewards by either selling the property for a profit or refinancing it based on its improved value. This releases funds for you to repeat the process. It sounds straightforward, and it is. But here's the crucial caveat. Your end product must be worth more than it initially cost you to produce and renovate it. Otherwise, you're not gaining money, you're losing money. Strategy 2, finding below market value deals. While adding value is one potent strategy, there's another, finding below market value deals. If you've been following my channel, you know that this is a specialty of mine. In short, you need to identify sellers who are willing to offer you a discount because you are able to make their life easier in purchasing. So it may be that you are able to buy more quickly, or you're able to flex around their timescales in buying something else. Whatever the reasons, you're making their life easier in exchange for buying at a better price. It really is that simple, and you find these properties by asking questions. In conclusion, so is property investment worth it? It's a question with a no one-size-fits-all answer. It's nuanced and depends on your approach. Success in property investment demands strategic thinking, knowledge, and adaptability. If you found value in this video, don't forget to like, share, and subscribe. Until next time, happy investing.